Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes boring but always important world of corporate filings. Today we are diving into People's Bancorp of North Carolina's annual report, a document that might seem as exciting as watching paint dry, but trust me, there are some interesting things hidden inside that will affect the way this company is doing business. We will focus on the financial numbers and what they mean for this bank. People's Bancorp, it's a bank holding company. Basically, a parent that owns People's Bank. They've been around since 1912, serving communities in the Catawba Valley and surrounding areas in North Carolina. They have 16 banking offices and loan production offices. At the end of last year, 2024, they had about $1.7 billion in assets. The company employs 21 full-time employees and 13 part-time employees, which equated to 2088 full-time equivalent employees. Company culture is an important element in their strategy. They say that their core values are employees, integrity, exceptional customer service, accountability, progressive, and positive. Bank holding companies and commercial banks are closely watched and regulated, and are mainly supervised by regulatory agencies to protect depositors rather than shareholders. The report mentions the Dodd-Frank Act and the Economic Growth Act, which have brought changes to the financial services industry. Let's talk about capital adequacy. This is really important for banks. The Tier 1 leverage capital ratio was 5.71%. Common Equity Tier 1 risk-based capital ratio was 14.35%, and the total risk-based capital ratio was 14.35%, and the total risk-based capital ratio was 15.32%. For the company itself, it's pretty similar. Tier 1 leverage capital ratio of 10.88%, Common Equity Tier 1 risk-based capital ratio of 14.47%, Common Equity Tier 1 risk-based capital ratio of 14.47%, and total risk-based capital ratio of 14.47%, and total risk-based capital ratio of 45.88%, Tier 1 risk-based capital ratio of at 14.47%, and total risk-based capital ratio of 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 14.47%. The bank is subject to the loans to one borrower limits established by North Carolina law, which are substantially the same as those applicable to national banks. At December 31, 2094, this limit was $29.1 million. This just means how much the bank can loan to a single borrower. Cybersecurity is now a big deal, so much so that the SEC is requiring public companies to start including in their reports disclosures about cyber risk management. Banks are a common target for cyber attacks. Cyber incidents could potentially result in the loss of critical data or the disruption of business operations. Now, let's move to the market for the company's stock. The company's common stock is listed on the NASDAQ Global Market under the symbol PEBEC. Before we dive into the financials, there is one quick thing to note. The auditor firm ID is 686. It's a standard inclusion, but not really exciting. Okay, let's get to the important stuff. The financials. In the consolidated statements of cash flows, we see that cash from operating activities was about $14.5 million in 2024 compared to $9.4 million in 2023. That is a good sign because a company that generates a lot of cash from operating activities is in a very good position. Next, we see that cash flow from investing activities is negative. This usually indicates that the company is investing in its own growth. And lastly, we see that financing activities is negative. This usually indicates that the company is investing in its own growth. And lastly, we see that financing activities is negative. This usually indicates that the company that generates a lot of cash from operating activities is in a very good position. Next, we see that cash flow from investing activities is negative. This usually indicates that the company is investing in its own growth. And lastly, we see that financing activities is also negative, which indicates that the company is investing in its own growth. And lastly, we see that financing activities is negative. Now let's look at the consolidated statements of earnings in 2024. Interest income increased from $63.6 million in 2023 to $94.23 to $94.5 million in 2024. But what does that mean? It means the company is profiting from its loans. Also, their net income is around $14.5 million, which is slightly down from $16 million the previous year. A reduction, though not too dramatic. Finally, the company mentioned a few risks related to their stock. The stock price can be volatile, meaning it can change quickly. So it is hard to resell your common stock when you want and at prices you find attractive. Now that we have looked at the financial numbers and the main areas of the filing, let's go over my analysis and thoughts. People's Bancorp seems to be managing their business okay. they're financially stable, and they're putting money into their business. The decrease in net income should be monitored closely because nobody wants to see their income decreasing. Overall, they look like a solid community bank. Thanks for watching. If you found this helpful, please like, comment, and subscribe.